Morning, Steve Fried in Chicago with the morning grain comments. Well, overnight we had some interesting news. You never know what kind of news is going to affect the grain price discovery, but in Cyprus, a part of the austerity plan is to start charging depositors anywhere from 6 to 12% for having money in their banks. And so that's like a negative interest rate. So there may have been a run, or could be a run, on the bank deposits, and that's causing a sharply lower euro trade. It's also causing a sharply higher dollar. So most commodity prices are sharply lower this morning. And in the grains, we're down about 15 cents in the beans, about 6 cents in the corn, and 8 cents in the wheat market. Last week we were already trending lower in the beans on some profit taking and some concern about demand, and so the technical signals in the beans looked negative. We also rallied last week in corn and wheat on some hopes that maybe the demand will improve, or maybe the domestic situation is tight in corn, and we're kind of rolling over today on the technical charts and suggest there could be also some profit taking in corn and wheat. All this news is also coupled with news out of China that their hog numbers are declining. That could reduce their demand for feed and could offer some resistance to the soybean market. So all those outside markets are influencing the grain prices. The market is still looking at a couple of other factors. Number one is the March 28th USDA stocks and acreage report. I think going into that report, people are hoping that the old crop corn and bean March 1 U.S. stocks will be low, and that suggests good demand and tighter supplies going into the rest of the spring and summer. The other issue is acres, and that they might be higher than last year, which could offer some more resistance to new crop prices. The second thing is weather, and we really don't have a problem in weather right now. Maybe some people in the Midwest would say it's too wet and too cold, but it's still kind of early in the spring season. But this week is the first day of spring, and it's going to be pretty cold for the first day of spring. South America weather looks like it's also improving, kind of drying out, so allowing harvest to move on at a normal pace. But we still are looking at the possibility of a record backlog in loading vessels in Brazil. So that's something that the market has to kind of watch and see if they can fix that situation there. So again, in the United States, if you put a gun to most of the weathermen's head, they would probably say this will be closer to a normal summer in the United States. If true, that would offer some resistance long-term to prices. So the Cyprus thing, the China hog numbers, demand thing, the weather thing, the USDA report thing kind of adds to some of the volatility in the marketplace. We still think that report will be friendly old crop and a little negative to new crop. And we still think that 2013 U.S. summer weather is going to be mostly good. So all those things could help nearby corn and bean contracts, but hurt prices long term. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
See you later.